of these overnight cues impact our own markets. We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Vivek joins in to get all the market cues we need to watch out for. Good morning, Vivek. It's been a forgettable week for the Nifty, but what are you picking up this morning?
Well, you're right, a forgettable need, one that market participants would like to forget in a hurry, given the kind of sell-off that we've seen. And what is actually surprising is the fact that while global equity markets are doing very well and all of the macro data, at least at this point of time, are quite supportive, despite that, the FII selling pressure has been quite intense. Like we mentioned, US markets, especially Dow Jones, up for the 7th straight session, and Indian markets are complete reversal of that particular development that we're seeing across equity markets. Oil prices, last week were at a fresh low actually, but what happened this week around is that there has been significant outperformance, especially in terms of oil prices. So yesterday, WTI futures, again, another day of gains is what they saw. Now coming to the Indian markets yesterday ended the session at a 2-month low. The 22,000 level was something that was under pressure throughout the trading session. Broader markets witnessed significant underperformance in yesterday's trading session. In fact, the mid-cap index down almost 1,000 points. Now, coming to what exactly dragged the market lower, it was earnings reactions. Earnings reactions across the board saw significant and exaggerated selling pressure if the numbers were a miss. So, which other stocks that saw significant pressure? L&T, Asian Paints, Tata Power, and the other pocket of the market that saw significant selling pressure yesterday was Muthoot as well as Manappuram on the back of restrictions as far as cash dispersals were concerned. Now, results, reactions today, what is it that we need to watch out for? BPCL, MGL, these are some of the names that will react to their results that were declared post-market as yesterday, and quite a lot of results lined up today as well. So that will be something that the market will watch out for. Cipla, Eicher, Tata Motors, ABB, all of these companies will come out. Now, the GIFT Nifty is indicating a gap up, but that has been misleading so far, given the fact that any gap ups have been so aggressively too. So that will be something we need to watch out for.
Vivek, thanks a lot for sharing all those cues and all the stocks that Vivek highlighted just now. Sudarshan will tell us about them in detail. Sudarshan, good morning.
Morning, Horma. So we'll start with one Nifty company that reported earnings after market hours yesterday. That is BPCL. Headline numbers were in line to marginal beat. EBITDA has risen 48%. Margin was up 250 bips sequentially. Gross refining margin came in at $12.50 versus estimates of around $15 per barrel. And company has also approved bonus issue in the ratio of 1:1. Next is Mahanagar Gas. It has reported marginal miss, but volumes were in line. Margin has fallen 340 bips sequentially, but volumes were up 2% at 3.77 MMSCMD, and EBITDA per SCM has fallen 14% sequentially to rupees 11.49. Next is Escorts. Earnings were in line, but commentary remains muted. Company says FY25 tractor industry volume growth is seen in low to mid-single digit, but Q1 demand is expected to be weak on lower Rabi output and elections. Next is Abbott. Earnings were below estimates but are up year-on-year. Revenue is up 7%. Margin has risen 100 bips year-on-year, and company has also declared final dividend of rupees 410 per share. Suryodaya Small Finance Bank. Healthy business momentum has added NIM improvement. NIM has improved 30 bips sequentially. AUM was up 34% and disbursements were up 30% year-on-year. Keep an eye on life insurance companies. These companies have reported monthly update for April. Sector has reported healthy growth. Annualized premium equivalent for companies were up in the range of 21 to 36%. On APE front, ICICI Prudential, Max Life and LIC have outperformed. On premium, LIC was biggest outperformer. Its premium was up 113%. And except HDFC Life, all the companies have seen premium growth in the excess of 25% in the month of April. Last is Manappuram Finance. Company has replied to query with respect to RBI's advisory. It says advisory with respect to rupees 20,000 for disbursing cash loans won't hamper the business because online gold loan forms 50% of gold loan book and is fully paperless. Even for branch originating loans, customers of Manappuram Finance prefers direct transfer, so it won't hamper the business of Manappuram Finance.
A much-awaited clarification there from Manappuram. Thanks a lot, Sudarshan, for joining in and listing out all the stocks that you need to watch out for. And lastly, Nigel joins in with cues from the FNO space. He highlighted the VIX a few days earlier, and people on the street are talking about it now. Morning, Nigel. How's the setup looking like?
Well, that's right. Hormas, we highlighted the fact that the VIX normally rises up ahead of a big event. And in this case, it's the election. We saw that in 2019 as well. The market pulled back roughly around 5%, and the VIX did scoot up. Now, that's continued. Even yesterday's trading session, it's higher. I'll say more than fear, it should be a repeat of 2019 because no one is building in any kind of negative verdict coming in from this election, and continuity is something that the markets are moving with. So that's the point on the VIX. What about the FIs and index futures? Well, in yesterday's trading session, they added shorts. And they added close to around 60,000 short contracts, which takes the short position to around 67%. Now, we'll pull up a graph and it'll tell you in absolute terms, the bar chart should come up for you. It's moved to around 1.5 lakh contracts on the short side. Just to word out here, for this contract, that 1.56 lakh is more like 75,000 contracts. Why is that? Because the contract size itself has changed. For the Nifty, from 50, it's come down to 25. So because of that, it appears that we are at around 1.56 lakh. But if you want to compare it with history, actually we're at around 75 to 80,000 contracts. So net short, yes, but not very, very aggressively. We have seen even 1.5 lakh in the past in the old contract format. Just want to make that point out for our viewers. The Nifty Bank, if we need to build on any kind of green that we're seeing, it has to play a factor out here. It's down 5% from its peak. It's down for 7 straight sessions. And that's the one that needs to bounce, needs to give Nifty some kind of support. The levels you're looking at on the, when we were moving lower, the 20 DMA was a bit of a support. Now it becomes a resistance. The 50 DMA is your first reference point. And you don't want it to go to around the 100 DMA. So those are the levels you're looking at on the Nifty Bank. And that's going to play the key role if we need to see a relief rally, which could be very much in the works. What about the Nifty? Well, the PCR is at around 0.9 odd. So it's not yet at around that 0.6 because yesterday one contract did expire. That's the weekly expiry contract. The Nifty levels we're looking at, 20 and 50 DMA, that's a distant away. But in the near term, the April swing low is very, very important. 21,777. The bulls will like that level to get defended and they'll hope for a bit of a relief rally from here on. So prepare yourself for wild swings. But after a weak week, I won't be surprised if we see some kind of a bounce in today's trading session.
Interesting. Those two levels, the key ones to watch out for, the April 19 swing low and the March swing low as well of 21,710. Thanks a lot, Nigel, for sharing the FNO setup this morning. Time for a short break.